Did Jerome Powell just resign under political pressure? What does that mean for you, the economy, and most importantly, your money? Hey everyone, I'm Ezra, and on this channel I make finance clear, simple, and actionable, and today we're talking about what's going on behind the scenes between Jerome Powell and Donald Trump, how that affects you, and what to expect. So firstly, who is Jerome Powell? Who's the Fed? Why do you care? Well, the Federal Reserve is the central bank of the United States who controls interest rates that determine things like your mortgage rates, credit card debt, student loans, the stock market, and essentially the cost of living. And if leadership of the Fed changes, so could interest rates. Jerome Powell is the standing chair of the Federal Reserve, originally appointed in 2018 by Donald Trump himself. Jerome Powell, a lawyer and former investment banker, led the United States through the COVID crisis, lowering rates to near zero, and since then has risen them to battle inflation. Jerome Powell has remained steadfast in his position to keep rates high, but that doesn't exactly align with Trump's growth at all costs mindset. Now, Trump's been known for being outspoken about his opinion on economics, even calling Jerome Powell clueless in the past, pressuring him to keep rates low to fuel growth in the economy during the COVID crisis. But recently, he's voiced his concerns to refinance the national debt, citing that Jerome Powell is costing the United States billions of dollars in interest payments by keeping rates high.
For interest rates, because we should be paying 3 points lower, and we would save $1 trillion a year in interest if that were the case, and all it is the stroke of a pen. And that goes for his board, too, because his board is not doing the job, because they should try and rein this guy in. So he's doing a lousy job.
And Trump himself was even questioned on rumors that there was a plan underway to remove Powell from office. However, Trump confirmed those are just rumors.
You have plans, or if you're back considering firing Jerome Powell, and what's your justification if you're thinking about this to do this?
No, we're not planning on doing anything. We're very concerned. He's doing a little renovation for $2.5 billion of the Fed, building a renovation, and they have a close to $900 million cost overrun, and it's a shame. But the biggest cost overrun is the cost overrun for interest rates, because he's always been too late, hence his nickname, Too Late. He should have cut interest rates a long time ago.
Now, can a president actually fire the Fed chair? Technically, no. The Fed chair is appointed by the president, but serves a 4-year term and can only be removed for cause, which usually means legal wrongdoing or gross misconduct. Simply disagreeing with policy decisions isn't grounds for removal. Now, Trump floated the idea of demoting Powell back to a regular Fed governor, but never acted on it. Now, why is this such a big deal? The Federal Reserve is supposed to be independent from politics. A president trying to fire the chair over policy disagreement would undermine the credibility of the U.S. financial system completely. Markets rely on the Fed being stable, neutral, and data-driven, not swayed by whoever's in office. Powell's term ends in 2026, but pressure could mount before that. If Powell resigns or is pushed out, markets could see it as a sign the Fed is becoming politicized, which would lead to higher inflation expectations, bond volatility, and global distrust of the U.S. economic policy. So, firing the Fed chair isn't legally within the president's power, so Trump has used public pressure instead. He's repeatedly attacked Powell in interviews, speeches, and social media, painting him as the reason the economy isn't growing fast enough. And more recently, he shifted tactics, targeting non-policy related issues like the cost of the renovations of the Federal Reserve's D.C. headquarters. The renovation budget reportedly exceeds $2 billion, has been highlighted as excessive in political discourse. Trump and his allies have used this to question Powell's leadership and judgment, even though the renovations were in the pipeline long before inflation surged and are likely unrelated to interest rate decision. Now, why does this tactic matter? Since Powell is legally protected from removal without cause, Trump's goal may be to apply political pressure to shape the public opinion, possibly laying groundwork to have him replaced in 2026.
So you were saying the other day that Scott Bessent, you're so happy with him at Treasury that he's not your top option to replace Jerome Powell whenever that may be, whenever you decide what you want to do with him.
Scott's doing a very good job. I'm very happy with Scott.
Is Kevin Hassett at the top of your list?
Kevin's somebody would consider. Kevin is fantastic, too. We have a lot of good people.
By shifting focus to spending and optics, Trump's framing Powell as fiscally irresponsible, which may resonate with people worried about government waste. And as of recently, there's been unconfirmed reports of Jerome Powell resigning from his current position. So what happened if a Trump-appointed Fed chair replaces Jerome Powell either through resignation or term expiration, because this could have massive effects across the economy. Trump's been vocal about wanting to lower interest rates, even criticizing Powell for being too slow to cut them in the past. A hand-picked chair might slash rates aggressively and boost short-term growth. Lowering borrowing cost equals a stock market rally, cheaper loans, and a booming housing market. But it could also reignite inflation, especially if done prematurely. Short-term gain, long-term pain. That's like giving the economy an energy drink when it needed rest. So if rates are cut too quickly while inflation isn't fully under control, consumer prices could spike again, the dollar weakens globally, the Fed loses credibility as a non-political institution, and long-term bond yields could rise as investors fear inflation. And if the Federal Reserve's strength lies in being apolitical, if it's seen as being controlled by the White House, global investors may lose confidence, the Fed's ability to manage inflation could be questioned, US bonds may become less attractive, and markets could become more volatile. The Fed turning into a political tool is like letting the quarterback also be a referee. Additionally, the stock markets could react unpredictably. The markets might celebrate the rate cuts, but long-term investors will worry about inflation, debt, and policy whiplash. So what should you do about all this? Well, firstly, stay informed, because things are changing almost every day. Secondly, if Jerome Powell does resign and we get a new Fed chair, don't panic, because that might be a great opportunity to refinance any debt that you have to lock in a lower rate. So that's the latest chapter in Jerome versus Powell. What do you think? Should the Fed remain independent, or do you think the president should steer economic policy? Because it's not just about personalities, it's about power, politics, and your paycheck. Let me know what you think in the comments. And remember, like and subscribe to stay informed, and I'll see you on the next one.